take it from the old high, put it down there. It looks like it's trying to catch a bid. If that can catch a bid, we can see where this can go. The rest of the sector looks good, looks even better than silver. So it wouldn't be surprising to see silver catch up and get to those old highs again.
Right on, brother. All right, guys. Good luck, everybody, today.
See you, Kenny.
Later, Kenny.
All right, let's bring out. Kenny, my screen just froze. There we go. Sorry. Right. Let's bring out today's featured guest. We got Brian Lund in the house. Joins us on the first Wednesday of every month. That's today. Funny how that works out. And he's here bright and early from the West Coast. Let's do it.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Brian Lund.
Good morning.
Hey,
So we're rebranding. We're the Strazza show now. Is that what?
Mm-hmm.
Love
You
it.
like it?
Yep.
Who needs
You like
that
it?
JC guy?
I think it's better this way.
Right? Less faux controversial takes, right? I said it. I don't work with JC. I can say it.
Yeah, okay. Oh,
Hey, Jason.
Brian, I'll miss you. I always think of you when we go to Future Proof, but this one's in Miami next week. I don't know. You don't like to leave California.
Yeah, I don't usually get east of Vegas unless there's a funeral or a wedding, you know. But funny you say that. I just got my credentials for Future Proof in HB. I just got them this week.
I'm coming this year. We'll have a great time.
So, dude, hit him up now. Go for your.
Yeah, that's the move.
Yeah.
I had no problem at the Miami one, but I know the Huntington Beach is a bigger deal.
Yeah.
You know, I don't know. Did you guys see? Somebody just sent me. Did you see this McDonald's CEO and the way he bites into a burger? It's all over the internet. Dude, they got to fire this guy. Who eats a burger like that? What kind of bite is that? They got to get rid of him.
Someone retweeted it and said, "This is a fund manager who's not holding any of his own positions," or something like that. You know, it's the same thing.
And then the Burger King CEO goes and does a video, takes a much bigger bite. I still think that's a piker bite. You should see the way I bite into a McDonald's burger. It would blow your mind. I'm eating half the thing in one bite. Not playing around at all.
There's a blind spot there, because the idea that like the CEO should be doing this virally memey thing, like just get in the C-suite and manage the company. Don't really.
We don't.
You're not a 14-year-old girl on TikTok. Just come on.
Fantastic. You know, it's 2026. You got to do the social media stuff, they say.
Well, but at least hire.
I mean, we're all
somebody
talking about it. I will say we're all talking about it.
Yeah, right.
Big
was that old saying that all publicity is good publicity? Isn't that what they used to say back in the day?
There you go. Brian, how do you navigate these volatile times? You know, I asked Jack the same question yesterday. I'm so glad you're on the show today. You know, we come in Monday, it's like, oh, nightmare, missiles are flying. Then again, yesterday, down 2% at the open. They're buying them back every day out here. The market sure seems like it wants to dig in and rally. Do you do anything like position sizing smaller, simply doing less, waiting for the dust to settle? How do you kind of go about these times?
Yeah, so I generally look at the market from a risk on, risk off, right? In my mind, I'm always gauging it from 0 to 10, right? Risk off to risk on. And what's on 10, more positions, longer time frames, because you can take overnight, over weekend risk, you know, and more trades, right? Because the market's got a tailwind. When it's towards the 0 end, fewer trades, smaller position size, shorter time frames. This is a frustrating market because, you know, one day we're up and then it looks like, hey, we're ready to break out. One day we're down. It looks like we're ready to break down. It's also a type of market where you don't really have base breakout trades, which are the type that I like. You have these snapback trades, these trades where, you know, something's falling. Some people want to step in and try to buy the falling knife. I like to wait for the first counter trend rally, then a little bit of basing, and then if we can get the move after the move. So it's frustrating, but if you don't panic and you look at the clues, it's not, I might say it's easy, but it's not as hard. Yesterday was a great example. You know, market's down, the Nasdaq's down 600 points pre-market. Yet I look at my list and I see ASTS, which is barely down at all after supposedly bad earnings, right? That is a huge signal right there. That's calling you out. And then as soon as the market opens, ASTS is green. And then all you had to do was just wait to see if it formed an intraday base, which it did. It had a beautiful little flag, and there's a very low risk spot you could have got in, maybe risk $1.50 and make $7-8. So if you pay attention, if you don't panic, that's the big thing, right? If you don't try to predict where things are going, and you just listen and watch where they're going. I always say don't predict, because when you predict, not only might it not happen, but then you're kind of looking away from what could be happening. So it's a long-winded way of saying, yes, I'm doing stuff here. But for me, every time a trader says traders love volatility, like you, I go, screw you. Like, I don't want volatility. I want a market that just trends like an MFer. Like, I want the market that came out of the tariff tantrum last April that just, if you were day trading that market, you're over trading. All you had to do was just get some positions and just go like this. I like that market, and we're not in that market.
Yeah. No, I agree with you. Still messy out here. And like the ASTS, what a great example of, you get a down day where it's just red across the screen, which really the last 2 mornings were great time to go digging and looking for some relative strength, right?
Yeah.
And all
the other thing I've been doing during this period is I've got some names that I think have long-term potential. Right now, it's always a dicey game when you try to mix your trading with your investing, right? So I'm trying to keep my investing separate, but I'm also trying to approach it with a trading mindset. So I've got some names like Oscar, that I think is going to be a long-term winner. I've got a name like Poet, which I think is going to be a long-term winner. Bros, right? Some of these, if you put a weekly chart up on these, for example, you've got Poet, which is like about to break a downtrend that started in 2014.
What a baby.
Bros looks like it's kind of got a cupish, handle-ish feel to it, right? Poet has been in a base for a year, although it's in the lower end of the base. If that's a stock that I think is going to have a good 2, 3, 5 year run, and let's just say I want to eventually have 10,000 shares of it, right? I want to get into that thing strategically. So what I've been doing is I've been selling puts, right, against positions, so that if I do get assigned the stock, I get assigned at a lower cost basis. If I don't, then I get the premium, right? If I build a position and it gets a little bit ahead of itself short term, maybe sell some calls against it. Just that strategic, what I call it active investing, right? It's not buy and hold, but it's not trading. It's trying to be strategic in building a position over time. That's what I've been doing. You can do it very slowly, right? So again, if you're trying to get 10,000 shares, get 1,000 here, get 1,000 here, sell some calls here. You see what I'm saying.
Scaling in, especially to some of these like primary trend patterns, there's really no other way. You don't want to just buy these things once, because these are long-term patterns in nature. Like something like this big base and Poet, you want to buy a couple times and then keep reducing your cost basis, if the opportunity arises. So I love that.
Yeah, I think the confusion comes when, we're all operating in multiple time frames in our head. I mean, it's very rare to have someone that's just like a pure trader. And there's only 5 different types of trades. There's a scalp, a day trade, a swing trade, active investing, and then buy and hold. Buy and hold's autopilot, right? That's super easy, dollar cost averaging. Scalping, like if I'm ever scalping, that means the market's in a bad spot. So try to get that out of there. It's really that spot between day trade and swing trade. When you're getting in day trades and seeing, do they have the price action to transition them to a swing trade, right? So that's kind of the area that people have to focus on. But you're constantly switching back and forth between objectives and timeframes, and you have to make sure that whatever position you're in or you're trying to accumulate, you're trading it in the right time frame. And if you're trading it in the right time frame, then the methodology for managing it is simple, because they all kind of true up based upon what your time frame is. But like we're all human and we get confused and we get into something for a trade. Now we think, well, I'm going to make it an investment or vice versa, and that's why I always get in trouble through my careers when I try to mix those time frames.
Yep. Great advice.
Yeah, I like that.
How about growth? Do you think, looking at a chart like the Mag 7, Mag's real toppy, you think we're ready to fail these tops, dig in, and get some rotation back towards big cap tech here? How are you approaching that space?
I always, whenever people ask me about big cap tech, I think about a discussion that you and I had live on a Spaces maybe 3 years ago. It was when Facebook was down like at 88, right? And everyone was saying that big cap tech was dead. And we were both saying that big cap tech does not have to get back to all-time highs the same way it got there, right? These companies are so big. They've got market share. They've got money. They've got, management. They've got talent. They can reinvent themselves so many different ways. I think a lot of these names are kind of in that mode right now. Like, you got Microsoft, which everyone says the AI is going to kill software, right? And you get companies that are laying off people. That's less Microsoft licenses, right? So people think, oh, Microsoft's dead. Well, maybe, but maybe Microsoft's smart enough to reinvent itself like it did with cloud computing. We just don't know. So it's going to take some time. People look at names like NVIDIA and they're mad because it's not just going straight up, but it's really just been basing sideways for like 3 earnings cycles, right? So I don't hate that. It's just not time to be in it. So I think the death of big cap tech is probably overstated. I think the same thing with software. I think a lot of software is going to go away, but software that has some sort of angle on proprietary data, I think will be here and will be better for it. So we'll just have to, but you just have to be patient. You just have to wait for it to wash out. It sucks. It's the hardest part of being in the market, right? We always say like, a bad market would be a bear market. Bad market is a sideways market. That's the worst market for everybody, and that's kind of what we've been in.
This is great wisdom from a guy who's been around and has seen this before. The bottom line is it's really hard to bet against the biggest, best companies in the world, big tech. It's just a tough game to play. They have more money than God. Like you said, they can constantly invest in different things, try to catch that next mega trend. And there's just nobody in a better position in the world to keep dominating in all of these new industries and growth trends.
And it's tough to bet against this administration. And this is not a political statement. Like the number one rule in the Lund Loop is we keep politics out of it because it doesn't help us make money. But you would just be ignorant if you didn't understand that this administration is trying to put a bid under this economy, this market. You guys were just talking about it. Okay, so all these insurers in the Strait of Hormuz, they're going to raise their rates. Okay, so what does Trump do? Like, we'll just do it. We'll just underwrite it ourselves, right? I don't know if that's going to work or it's not going to work, but the point is this administration is a business administration. They're always looking for ways to backstop the market, to backstop investors. Doesn't mean it will work, but to be too bearish against that, I mean, maybe in 2-3 years, if we get a change in administration or a change in parties, okay, but like we still got runway, I think.
Pro markets.
And what's the sectors we're looking at now? If we're looking at, we're going, okay, we got big cap tech going sideways. We've got all these things happening. What is the sector that you guys are looking for, especially you, Brian? What are you looking at that's something that, hey, this is trending. This is something that looks very similar to something coming out of like Liberation Day, let's say. Is there anything out there that you're seeing that's a sector that you like right now?
Well, obviously the big sector is energy, right? We in our trading room, I bought Devon and Oxy calls back in January, sold them the day that the missiles flew, right? Now we have to see some digestion, right? See if that space, flattens out a little bit and bases again. I think for me, we're in a tough spot because I find myself looking at sectors that have been really beaten up that I normally wouldn't look at. Like I like to look at strong sectors, but now I'm looking at some that have been beaten up that might have seen the bottom. And I think one of those is possibly the restaurant. Like if you look at CMG, which looks like it might be forming like kind of an inverted head and shoulders, right? Maybe putting a bottom in there. There's some names like that Kava, Bros, which I already talked about, which is so not hot. It's like if I'm going to be in something, I want to be in tech. I want to be something that's fast, liquid, whatever. These names are beaten down, but they could be in a spot where they're starting to turn around. And again, if they are, and you're an investor, this is where like selling the puts lower and things like that can get you in at a better cost basis.
I like it.
No, there's a lot.
I hate Kava.
Areas like
Kava
that
sucks, right? I don't care if their food's good or not. I'm just looking at their stock, right?
Yeah.
Do they make gyros?
Gyros. You guys with your East Coast pronunciation. It's gyro. It's not VWAP. It's VWAP. Let me just come on, Steve.
Do they make euros?
They don't make gyros. Boy, it's been a while since they've been. I mean, they have the non-bread, and they probably do have. They have falafels. I know they have.
I don't know. It's all in a bowl, I think, right, Brian? Everything's in a bowl.
Stuff. I want to. I want a handheld situation for my lunch.
Yeah.
As I always say, go to your local Greek family or Mediterranean or Iranian family restaurant. You'll get way better Middle Eastern food than you'll get at Cava.
I go to Zorba's and it's fantastic. Eating about
Zorba,
3 or 4
nice.
gyros a week out here lately. We're on a thing. We're doing it. We've been stuck on it for a while.
I mean, Cava is like if they had a chain of Vietnamese restaurants. I would never go to those restaurants, right? I would go to the right.
We got Vietnamese something yesterday, Brian, from a legit spot. We drove 30 minutes to pick it up, and there was congealed pig's blood in the beef noodles. It's
Like in
comes
squares?
like block. Yeah, it's like a black square.
Yeah.
I didn't eat
You need it?
it. I didn't eat it. Should I have?
Good stuff. Look, I don't like everything about Vietnamese food, but like some of that stuff that I would normally as a suburban white guy growing up here in the 70s would be like, like, thank God my wife's Vietnamese. She's introduced me to so many different things. And I initially would go, but some of it's pretty good.
It's good.
Chicken feet, yes or no?
No,
No.
Definitely not chicken feet. No.
Frog legs?
My daughter and wife love it. My son and I, we sit on the other end of the table when that happens. So.
I've never tried it actually.
Yeah, they're very gelatinous. Just not my thing.
I could do frog legs, but I don't know. I don't know about the chicken feet.
How about escargot? What do you think about escargot?
Oh, love it. Come on.
Right?
Love it. Well, I want
And garlic butter.
Yeah, it's butter and garlic. What's not
Right.
to love about butter and garlic, right?
Every time I'm at a steakhouse, it's my go-to app. It's my go-to app.
Jason, what's your go-to meal? What's your deathbed meal? What are you gonna eat?
I'm Mediterranean all the way. I'm Mediterranean. I also have like an insane thing where I can eat the same thing every day forever and ever and ever. And I have been on a Mediterranean kick for probably about a year now. So dinner every night is something Mediterranean. And not to mention, we also the best restaurant I've actually been for a long time. Actually, I just went to with Steve, which was that Lebanese restaurant in Miami. That was unbelievable. Yeah.
I'm going back. I'm going back to that place. I really love that meal. Jason, they do the best dips. I mean,
oh my God. Yeah.
Dips. I could just do the dips, the ganoush and the white stuff, the cheeky and hummus, all different flavors. Just amazing. Sit there, give me a bunch of pitas and just leave me alone with some dips.
I'm part Lebanese, but I have to have Rick explain it to me what I'm eating most of the time. So I have no idea either. I was raised by suburban white people as well, so I'm adopted.
Well, come out here for future proof. Every time the guys come out here, I take them to Little Saigon, which is right over here, and we do it up. So you'll get some good Vietnamese food there.
Yeah, I'd love to do that. I'll hit you up at some point.
All right, we will all hit you up. Brian Lund, it's always a pleasure, sir. Thanks for joining us on the morning show.
Yeah, thanks, Brian.
Thanks, guys. Appreciate it.
Thanks,
All
man.
right. I always appreciate when our guests wake up.
He's the best.
For him, it's.
I didn't know you were on a Mediterranean thing too, Jason.
It's a kick, man. It's a kick. But I also, it's because I can't eat bread now. I can't eat dairy. So like between those two, it's like, what's a great meal I can have every night? It's basically Mediterranean. And even when I venture off, it's like go out to eat with my friends. Where are we at? We're at a Japanese place, which is just, basically the same food. Or you go someplace else and it's basically the same food. So it's just like, it's easy for me to be like, what's the best, because I have a Iranian friend. I'm like, what's the best Mediterranean restaurants around here? And he'll just send me a bunch of them. So I'll hit those up or make some Mediterranean food myself. It's awesome.
Fantastic. Good for you. I need some recipes. I'm going to leave you now, guys. It's a fast market. I think we're going to go put some trades on. Busy
All right. Strazza is getting
right,
ready for his members only call for the beat report. Usually it's Wednesdays at 11. Today it's at 10:30. You should have already got an email about that if you are in the beat report. If you're not involved with the beat report, I'll drop the link in the chat or on the screen actually right now.
I'm very sorry.
Get involved.
We just had to change the time, Spencer. I've been trying to go to the dentist for like a month and a half now. I've already skipped 2 appointments because I was too busy, and I could barely chew in the back of my mouth at this point. So it's the last thing I want to do is leave my desk for an hour and a half during the day. But it's an emergency. I gotta go. There's no time.
Gotta go.
Bye, guys.
He's got to go to the dentist.
Take it easy,
You gotta take care of your teeth
dentist today. Good luck with the dentist, man.
Got to take care of your teeth. All right. Take care of your teeth, everyone. All right. Let's wrap the show up and let's bring on Mary. She was kind enough to send over a few charts. I'm sensing a theme here between what you guys are talking about and the charts that Mary has sent over.
Nice.
You guys are there's commonalities, which I think is a good thing. So let's bring her out and let's talk about it.
Hey, what's
Good
up, Mary?
morning.
Hey.
Nice to see you, Jason. It's been a minute.
Nice to see you as well. Did you bring charts of flowers or anything for me?
I wish. Honestly, I feel that seasonal depression setting in something fierce.
Yeah.
No,
Granted,
Mary, the
you
bottom
live
is
in
in.
a different place.
Mary, the bottom is in.
The bottom probably is in, but I will have snow through April.
Mary and I talk
sure.
all the time about flowers and our depression as there's nothing, because basically I grow a bunch of flowers as well. Mary has the most beautiful flowers. So we
Thank
just
you.
kind of talk back and forth about that. And then we get into the depression period from basically, I want to say November all the way till April, May. So yeah. It's a lot.
Yeah.
It's a lot.
It
for
is.
us.
Mary, daylight savings is this weekend. We're getting more sunlight. I know you're going to get more snow because there's always the fakes. Michigan always has fake spring and then back
And
to winter.
multiple fake spring. Yeah.
Right.
My kids, I remember, had a snow day like the 1st of May once. It was crazy.
Yeah. But
It is what it is.
just try to stay strong for a few more weeks because the bottom is in. Spring
Bottom's
starts.
in. And
Yeah.
maybe we have turned the corner. I actually do have some things coming up out of the ground. We did have last week like a 50, 55 degree couple of days, which was
See?
fantastic. But like I've got little tulips coming up, hyacinths, daffodils. They were all starting to come up. I'm like, no, go back to bed. Go back to bed. It's February.
You're going to die.
So, I
You're
know.
gonna
So
die.
fingers crossed.
All right. Mary reads all of our research, or as much of it that she can, at least.
time for.
And, there's a common theme here, Mary. You sent over a bunch of energy charts and a bunch of software charts. So
Yeah, so I know.
that reflects what these guys have been talking about.
I'm an avid listener and an avid reader. Absolutely.
Yeah.
Funny enough, though, so even before everything happened over the weekend, on Friday, I shared the XLE chart because we had monthly candles. I put it up on my Twitter, and this was the breakout that I think all of us have been waiting for. I remember actually talking about this. I want to say it was even Christmas Eve, our Christmas Eve show. I shared the XLE chart before the breakout and was saying, this is the chart that I'm most interested in 2026. And now here we are. And throw up the XLE chart. I just want to, I know everyone's probably already looked at it, but monster 18-year base completing, moving up and out. What I really love about this is the monthly PPO cross, which is down there at the bottom. So this move is just getting started. Yes, it's probably extended. Again, it comes back down to that time horizon. If you're looking longer term, this is just getting started. And as I've learned it, the bigger the base, the higher the space. And for me, I've been long, I've had a legacy position in some energy names that it was funny enough. My husband's like, saw the move after on Friday and things were up. And then of course the news over the weekend, he's like, should we be selling? Should we be selling? I'm like, oh, no. We are just getting started. In fact, I actually, so tell me if this is a chart crime or if this is too cute, but I pulled up a chart of gold. And I said, honey, you got to take a look at this. Look at the comparison. Typically, you've got metals leading the energy move, and look at what gold has done. Look at the space. It's exactly the same. Now look where energy has the potential to go. Is it going to go that fast, that high? Who knows? But, you know, all of the ingredients are there to have a huge move in the energy space. So I'm very excited because, like I said, I've been long for a very long time. But I did bring a couple of charts along for people who might not.
Well, yeah.
have
Well, and
exposure.
what's funny, Mary, what's funny about the XLE, what always makes me laugh about it is look how long it's taken.
18 years.
Well, no, I mean, I'm talking about the last couple of years, right? Because we first,
Right.
got here, 2 years ago, right? Longer, 3 years ago.
Mhm.
Right, was we
Then
first
you've got
got
that
back up here.
volatility compression that Steve
Yep,
loves
started compressed
so
after
much.
22, 23. It barely tapped a high, but it's just made basically sideways since 22. But also remember, gold did the same thing.
Yep.
Gold made
That's
a big
right.
run, and
Go
then
back
it
and
went,
look at the chart.
Yep, it went sideways until the beginning of 23, right around the time that oil topped out. So it's very interesting to kind of look at it that way and go, okay, well, let's see where this goes. So I think you're right, Mary, where it could look very similar to when we look at like GDX right now or something. We could basically overlap that in a year and be like, well, energy looked very similar now, and now energy is basically caught up to where gold is.
Yeah, exactly. So I did bring a couple of charts along for people who might not have exposure. Great defined risk. So Chevron, right there at that level, call it, let's say 190. We're above 190. Next move is to the higher. You can be long. Use that 190 as an out. Maybe give yourself, a little bit of room to let it dance. Again, time horizon. If you are a long-term investor, this is a great chart to get long and know exactly where you're going to be wrong. Same thing with Comstock Resources. Throw up that one. I'll just kind of move through these kind of quickly.
Yeah.
What I love about this one, you've got the VWAP at that same breakout area, anchored from the highs and above, let's say 20. We had a little breakout, failed. Another little breakout, failed right back here at this very obvious logical line of interest where it's finding some support right now. It is still trading above that VWAP anchored from the highs. So again, a great place where you could define your risk and know when you're going, if you're wrong, you'll know soon and you'll know very clearly, I'm early, and just keep it on your watch list, put a alert on it and get it alerted the next time it starts trading through that VWAP again. So that's kind of where my head is at long term, is the energy space. I'm going in and looking for other things that have moved. I'm setting alerts for some pullbacks or some places where it might find support. If we do get some of that give back, I'm looking for places that I can set alerts to get long some more energy. In the shorter term, I love, actually short and long term for that matter, I love the software because again, you can easily define your risk against last week lows. So I was putting IGV in my husband's IRA last week. IGV just kind of as, overall huge pullback here in the last number of weeks, months, I guess, and finding support at those former lows. What is that? Back in April, the April 25 lows. And that has been support a couple of times. So put in kind of a great looking candle there. I would love for this one to get above the VWAP anchored from the bear market lows. I'm going to use that as confirmation, but I brought along some software charts that look very, very similar. So we've got Microsoft. I got long this one. Actually, I added to my long-term position because I felt like this is a great place to just add to what I perceive is going to continue to be a long-term winner. It's, yes, it's gotten hit by news and we don't exactly know where AI is going to go, but Microsoft is one of the big boys. They're going to figure it out. One way or another, they're going to figure it out. Had a nice doji candle last week and nice indecision. Now we are green on the week. And so I like this one against last week's lows. Same with the next chart is Adobe. This is a massive top. Could be a massive top. Yes, it could be. But I love a little scoop and score, right? This one actually, I'm kind of angry at because I was in this last week and I got shaken out earlier this week. So now I'm kind of mad about this one. But I'm still looking.
She's back for revenge.
I'm back for revenge. Revenge trade this one because it did undercut those lows, previous lows. And so, did good old scoop and score. I'd say, as long as you can stay above last week's lows, I like this one to the long side for, this could be a quick trade. This could be the low that's not a top that, we continue higher for the rest of all time. Who knows? But I like the defined area of risk. And the last one I brought along, Palo Alto Networks, same idea. Is this a top? Maybe, but it dug in and found support right where it needed to. So again, if you're looking for shorter term trade or even potentially in these big cap names, a longer term name in the tech software space, it's a great place to know where you can get in, where you need to be out, and we'll see from there.
These are some good ones. I'm going to put a couple. I'm going to put the Comstock on my list. That was my favorite of the ones you just shared. That might be going. That might be going in the portportfolio. That's a nice looking chart.
I've played this one a couple of times, and I'm back in again. So again, long term, if the energy is going to go, I think the Comstock goes with it.
Yep.
Great base.
Chart.
Completely agree.
Jason, before we go, any charts that we didn't get to that you wanted to hit on real fast? I know there was a bunch in the deck.
Good thought. Let's look. If we go to there's I think it's chart 15 on. Hop through a couple of them real fast. But yeah, there's a few there. Let's go through some macro stuff because it's a good time to talk macro. So looking at this one here, this one really is like, for me, like what I really like to do with the intermarket charts and the ratio charts is just kind of go through those once a week and really get a feel for what's going on with the market, what direction everything's moving in. This is one of my favorite ones. This basically is showing you gold against commodities, the New York Stock Exchange, so broadly stocks against commodities, and then bonds against commodities. So at the bottom, you'll see bonds against commodities have done terribly. And a lot of people keep talking about the fact of, commodities haven't done much and so on. It's like, well, bonds have done a lot less. And not to mention, if we're talking about commodities, most of these indexes are primarily weighted in energy. We've been waiting for energy to wake up. Energy finally wakes up, and that is a huge move against the bond market currently. Now, once again, everybody's seen the big spike that happened in TLT, and they're like get very excited about it every single time it happens. It kind of remembers when you're a kid and this is for my age range, so I'm 40. So when you're a kid, you're watching TV and you're sitting there and you got the rabbit ears and you're trying to look at the Cinemax stuff so you could see possibly a naked girl. And you're like, and then you see a naked girl and everybody gets excited. Like, I would do this with my friends when we were like 12. And so everybody gets excited. Oh my God, you saw, and it kind of reminds me of TLT. Every time it rallies, we all get super excited. Yes, TLT is coming. It's going to happen. It's finally here. And it's like, I'd be surprised.
And it's over.
And it's over. Yeah. And go back to blurry static TV.
Right.
So that's the end of that. But I think here is a good time to look at that. I mean, if you look at the red line too, that's stocks versus commodities. That's rolling over. Even gold versus commodities. And this is something that I haven't seen at all yet because gold's been parabolic compared to commodities this entire time. It's starting to slow down. It's actually rolled over a little bit. So this is something I want to really pay attention to here. If oil and energy are really going to be where you want to be right now, which I believe it is, this is probably going to continue. Doesn't mean gold's just going to go to zero. I just think gold might slow down compared to the energy sector. Doesn't mean stocks are going to zero. I think stocks will just slow down compared to the energy sector. Bonds, I wouldn't be surprised to see those fall on their face and continue to fall on their face going forward. But maybe it just goes sideways and commodities just continue to outperform. So if we hop to the next one, this is the band squeeze against the commodities complex. So this is a CRB index, once again, very heavily weighted in energy. Highest high since 2011 is very significant. Something we haven't seen in a long time is a massive move in the energy sector. So like Mary showed earlier, we're getting XLE finally getting up and over those, I think that was 2015 or 2014, 2014 highs. That it's basically been stuck around that range since 2008. And so now we're also seeing the commodity complex, meaning this is things like gasoline, heating oil, natural gas is even in there. You have just the energy sector, oil, and so on. This all looks really good. And so now we're kind of seeing this one move. And so we have this band squeeze breakout that I've been highlighting for a long time. This is a monthly chart. A band squeeze breakout on a monthly is very significant. And so explaining the chart going back, you see that this creates big moves in the commodity complex every single time that this happens. A lot of people always ask me, well, what happened in 2020? Why didn't it work? Band squeezes don't tell you directions. That's a technical analysis. So we got the breakout, which is telling us to the upside. In 2020, we got a breakdown, which is telling us the big move was coming to the downside, which it did. And then it ripped up higher. The band squeeze continued to kind of go off after that point. But now we're here today. We've got a band squeeze, a breakout, and I don't think this thing's going to stop anytime soon. So I think that the energy sector is going to continue to move. And just hop through the next few.
Wait, hold on. Do we have a band squeeze, or are we just starting to maybe get a band squeeze? This looks
We're
like
just no, we have it's a band squeeze. So
Okay.
band squeeze is anything that's tight. So the bands are tight. So we're looking at tight bands any way you look at it when it's down in that blue area. Now it's starting to curl up and get out of it, but it hasn't even gotten out of it yet, which is telling us that this move is just starting. So once again, it's time frames too. Short term, sure, you might see pullbacks and so on, whatever. I think Mary's on a more of a time frame like me, looking 6 months, a year, even possibly 2 years, 3 years. I think that this is probably a continued trend that we're going to see in the energy sector. And then if we look at the equal weight energy sector, man, this thing is also telling us the same story. Same exact thing that Mary showed us earlier. New breakout. If you look at the small cap energy sector, it looks very similar over and over again. So next chart is the CNQ. And so Canadian energy looks very similar, also breaking out. This is what I was talking about earlier with we have really good breadth across this entire sector telling us that we possibly have a very sustainable move here. And so there's a lot of stocks we've highlighted today in this sector that you can make a lot of money in still, I think, going forward. And going to the next one, and then we can kind of end it on the last two. So Frontline, this is one that I highlighted back at the Portfolio Accelerated. I brought a couple names at that point. I think DVN, Frontline, Nexa, Tank, TK. So if we look at a bunch of these shippers, though, these are also have been doing really, really well. But also I want to highlight these massive base breakouts that we've been seeing. So as we're seeing these massive base breakouts, once again, more ammo for the energy sector. So I'm kind of going over that over and over again, but that's important. And then last but not least, this is something where, it's a structural change. Most of the time when we see structural changes, this is when we see major moves continue to happen. So structural change meaning go back to the dot-com bubble. If you look at the left side of the chart, bam, 2000. Around that time, oil in 99 went under $10 a barrel. It was the end of oil. The internet has taken over. It's changed everything. Have we heard this before? Yeah, we've heard this before. It happened also in the 70s. It also happened in the 30s and so on. Technology was going to take over everything many times. Then basically oil says, just kidding, moves up to $150 all the way from $10. In 2008, it topped around $150. Go back to the 2020 election. Right around that point in April of 2020, we had oil prices go negative in the front month contract. That negative pricing in the front month contract led to a massive supply issue, which created the shippers to move up quite a bit. If you guys remember just a second ago, we talked about some of the shipping stocks. And then as that kind of happened, we moved in towards the end of the year, right after the election, and then the energy sector went crazy. Small caps went crazy as well. So this is another thing that's another point to say, okay, we're in probably a very strong environment for energy. Then get to where we're at today, seeing the same thing. Small caps are leading once again. I don't know what the catalyst is just yet. It's easy to look back and say exactly what it is. We could say it's this, it's Iran, it's Venezuela. I got on the morning show during the Venezuela situation and said, hey, I'm pretty sure oil has bottomed out right here. So if we're looking at that, I think it has. And right there where that question mark is where this turn happened. We started to get very heavily into the small cap space, started getting the energy space even more, and energy has taken off and not looked back. So basically all of this to say that I think that the energy trade is here to stay for a while. And I think things like agribusiness, copper miners, metals and mining, steel stocks, aluminum stocks, lithium, even solar are probably going to do well this year in this current cycle.
It is so wild to me to look at this chart and look at the volatility of the last few years compared to like 2002 to 2019, where we pretty much had a pretty consistent slow and steady uptrend of large caps outperforming small caps, and the last 5 years has been back and forth, right? Violent periods of outperformance on both sides, and that is not how things used to be. So
what we're looking at here, and in the 2020s, and I think a lot's changed. Like not as in like the markets have always been volatile. Things have always happened, but since 2020, there's been a lot of volatility in life. I mean, like just going like the situation of shutting down the economy, businesses just up and vanished. I had 2 businesses that just poof, that was it. You know, like you basically have a very different scenario here. And so as things are kind of fleeting and a little bit different and more volatile in life, I think it's showing up in markets as well.
Great charts, Jason. Everyone, if you want more Jason Purrs in your life, I would strongly recommend you get his research over at the Gold Rush. I will put the link up on the screen. Jason and Sam do tremendous work multiple times a week, sending out reports, sending out videos, trades, obviously, what they're doing with their portfolios, price targets on the upside and the downside, everything you need to trade the entire commodities complex, right? Whether, gold and beyond, right? Commodities, fixed income, right? Currencies, all of it, right?
We are the Buzz Lightyear of the gold mining space. To infinity and beyond.
There we go. Where is my gold? Where's my Gold Rush link? I'm not seeing my Gold Rush link in here. I don't know why,
let me just answer that for you. You want more Jason Purrs in your life.
There we go.
Do it, guys.
allstarcharts.com/gold-rush. You can get Jason's research in your inbox and on your screen and in your portfolio every single day. Jason, thank you for guest hosting today. Mary, thanks for stopping by. Thank you to Brian Lund, Kenny Glick. Thanks to everyone in the chat. That's it for us here. It's a very busy day on Stock Market TV. Kenny Glick will be live at 11. Jeff Mackey will be live at 1. And then at 4 o'clock, Strazza is going live for a special. He never goes live at the close. He's going to go live at the close today for a special live stream to talk about the fast trades he's been making. We talked about time frames earlier. Talk about, someone like Jason is looking at 12 months. Strazza is looking at like a week, right? Mm-hmm. And Strazza is in a great mood because a lot of his fast trades have been working, and he's going to talk all about that specific strategy for trading using a short-term time frame. That'll be today at 4 o'clock. The link is on the screen and in the chat on YouTube. We will see you there. And then to wrap it all up today, 5 o'clock Eastern time, Riley Roseby going live to tell us about how in the future there will be no drivers and it'll be fully autonomous. And he's thinking about that, and he's positioning his portfolio for it. So that's 5 o'clock today. Godspeed Live with Riley Roseby. Thank you everyone for watching. That's it. Go make some money. If JC were here, he would say YOLO responsibly. So I'll pass the message along.
Later, guys.
Thanks, guys.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go